What's good, YouTube? This your boy Romeo Trading back again for another video. I want to jump right into it today. Subscribers are up. I appreciate you guys. If you like this video, go ahead and hit that like button, hit that subscribe button. Feel free to leave a comment if you enjoyed today's video. Today we're gonna jump right into it and go ahead and start talking about GameStop, the fan favorite, the one that broke the internet. Let's jump right into it. Me personally, I'm not touching it. Me personally, I'm not touching it. First of all, you guys know I trade stuff that's under $10. Once you get out of $10, if I'm not already holding it, you guys can have it. So let's start off. You guys know how I do it. Let's start off with the monthly. Currently, monthly is red. Sellers, bears, shorts. In my opinion, they are in control. All the way up from here to around this 500 area. I'm pretty sure it hit 500 pre-market. Whatever this day was, I'm pretty sure shorts have been in control since up here. So if you guys really want to squeeze out some shorts, 500 is the target. If you guys really want to squeeze out some shorts, because that's where they are, right up there. You really want to cost them some money, 500 is the target. But right now, they're still in control. Pre-market, I think we're up to like 200. That's not bad, but the monthly's still red. For buyers to really take control, we got to get this thing over this 325 area. For buyers to really take control, we're gonna see. We're gonna see what happens. Like I said, we already done ran up. This was January. This is February, the pullback. Shorts, sellers, all that stuff, whatever, woo-de-woo. Pull back, right? As a swing trade, over this 53.50 would have been a good area to buy. We took a similar position like this on AMC. Let me go to AMC real quick. Because AMC is under $10. So we got the same pattern on AMC. You would have just took the high of the week. It's a red month, but our expectation wasn't for it to go back to 16. But hey, AMC squeezed up too. So this high was 625. That's in my last newsletter. So like I said, we're profiting on this right now. So, you guys stay tuned for that. But yeah, it's the same pattern. Red week, red week, red week. Only thing you do is trail down the high of that week. Once you get that break, you should be good to go. But back to GameStop. Pretty similar pattern. Like I said, if it was under $10, this would have been in my newsletter. But that's your entry right there. 53.50. That's your entry. That's plain and simple. Right now, if you're looking to get into GameStop right now, you're on the momentum side of it. Keep that in mind. You missed the entry. So before the pop, the actual real buyers were already there, trailing the high of that week. So this is all momentum. Like I say, 325 is a good area for a turnaround. If you like, just looking at this, you got, let me see, roughly, we're just gonna round it up. We're just gonna say like $250. We're gonna say we got, let me see what the range is. This is a $283 range, right? So we're just gonna say $300. So this thing has potential to go up to $6. Because normally, once you get a move up like this, see this huge tail here? We had from a 500 down to roughly 300. We'll just say 300 from 5 to 3. That was roughly a $200 move. And then we got roughly a $200 move to the downside. Well, actually, it was a little bit more than 200, actually like $300. But, if this thing continue to run up, I think we can easily get back to the $500 area or not more. Because like I say, if we start getting up to these levels, the squeeze is going to be back again. And then on top of that, anybody that missed out on the last one is I'm hitting the microphone. That's just how excited I am. It is 3 o'clock in the morning, by the way, and I'm wide awake. Throwing it out there. I was up at 2. So anybody that missed this last time, definitely gonna be looking to get into this time. So that momentum alone could cause some problems for a lot of people. Currently, we up to 200 bucks. If we're looking at the daily, we'll see that this was a previous gap down area. So getting over 200 bucks, and then we got a pivot high in this $400 area. So we'll just say between the $200 and the $400 area will be some good price points, and then your $500 area. 300. We do got some bottoming tails here. We do got some bottoming tail. I mean, I would just say every $100 you're gonna have just a little resistance, because somebody has to step up, and there's gonna be a lot of profit taken in those areas, as you guys can see. You know, gapping up to these areas. The first gap skipped 200 altogether, and jumped and gapped right over 3. It probably hit 4. You know, opened up in this area and retested this $3 area. Had a nice pullback. Tested this area, gapped down to the $200 area, ran up to almost 5, pulled all the way back, gapped up over this $300 area again. You know, so that would have kind of been like a head and shoulders. Yeah, that's exactly what it is. Just looking at the daily, you could see that it was head and shoulders. Came down, came back up, came up, came here, came down, right? Came down, went up, gapped down, popped back up again. I'm pretty sure the 4 hour would clean that up, but yeah, I'm pretty sure that's a head and shoulders. So yeah, it's coming back down. But yeah, pretty much every $100 bid, every $100, just kind of be careful, because like I said, the $100 marks are just big marks for just human nature. So you guys be careful of that. But you know, we're gonna get into risk management. I don't want to make this video too long because I want to get it out before you guys actually, stuff start moving around. I'm not worried about the 4 a.m. traders, because volume doesn't hit till 7. So that's when everybody else gets in. You know, you got a couple people that traded at 4, but the real volume comes in at 7. But that's it for us the monthly. Like I said, getting over 325 would definitely put buyers back in control. Currently we at 200. The daily, like I said, every $100 is basically a pivot. So you got to think about that. If you plan on getting in this thing, holding it the whole day, and you have a small account, and you want to risk $100, you really just need one share. Seriously, just one share, because this thing has potential to move $100 in a day. It has the potential. If you're risking $100, and you just want to hold it and see where it goes, if you just risking $100, that's it. I mean, $100. You just need $1. I mean, one share. Hey, it's if you're risking $100, because it got the potential to move $100 a day at these levels, because there are limited sellers up here, right? And the spread is gonna be so big. Let's see what the spread is right now. Spread's pretty tight actually, but this is market spread. This is not real time spread. This is just closing spread. So 168 is where to close at. So over 200 is what we're looking at. I think that was pre-market. So let's drill down. Let me see here. Give me a 4 hour. If you guys are trading on really low, like 1 minute, 5 minutes, be careful. That's all I'm gonna say. Be careful. But we're gonna drill that. We're gonna talk about that too. So 4 hour, we got 1 hour, and we got, let's say, 30 minutes, right? Getting text earlier this morning. Can't stop, won't stop. So let's look at the 4 hour, right? So we reached 200 exactly. So if you guys really want to take this thing, you could do 200. Let's just say you could do 140, 150. We just do 50, $50. So if you really want to, like I said, you got a $50 spread on this thing. So how much are you risking? Let's just say you're going off the 4 hour. Let's say you're not really good at trading. This is speculation for you. You wanna maximize risk and reward, right? So if this thing has potential to go, 500 plus, you never know. This is a pretty wide risk, going off the 4 hour chart. You could do 200 by 150. That'll put you right at the low. of this green bar and then right at the high. So you would put a stop limit order up here at 200 and you would have a stop down here at 150 just in case. Like I said, this is $50 range. You got plenty of room, right? So if you're just risking $100 on this thing, you would just need 2 shares. This is why Robinhood and a lot of these companies reduce the shares, because once you start reaching these levels, the game changes. Well, GameStop. The game stops. But the game changes at these levels. Like I said, you got a $5 risk on a 4-hour chart. I mean, a $50 risk on a 4-hour chart. A 4-hour chart, you got a $50 risk. So, 2 shares. If you're risking $100, you get in here, every 50 shares up, you get $100 with 2 shares. If you're risking $500, then you need 10 shares at $500 for a $50 risk. You guys be careful out there. I don't know if I need to say it again. If you're on a 4-hour chart and you want to take a high, please use a stop loss. Please use a stop loss. This is a $50 risk right here. So buyers are in control over 150, right? Let's just say that. We could do the high, because buyers did step in down here, right? If you want to do a $80 risk, power to you. Power to you. But this is not even including what's going to happen at 7 once the pre-market really start rolling, once the volume start kicking in. This thing could just easily shoot up off the bat. It could gap up. You never know. But we're just talking about right now, so you guys can understand risk a little bit, just a little bit before everything starts crackling down. Because from 5 to 9, you'll have another 4-hour doji. And then at 9 o'clock, that's when you're going to really start seeing what direction GameStop is going to go. If it don't already be up to $400 at 7, 8 o'clock. So, just kind of give you guys an idea. So $200 by 150, you have a stop limit up here in this area. You know what I'm saying? $50 risk. You just need 2 shares. If you're risking $100, if you're risking $500, guess what? You need 10 shares. Be careful, you guys. Be careful. This is trading. This is not YOLO trading. You only live once trading. This is, this is not it. This is just regular trading. If you want to risk $100 with a $50 risk, do the math, you just need 2 shares. Right? So, drilling down to the 1-hour chart. Let's just say this is a 2-hour chart. We have a similar R&R, but it's a little tighter. You could do 200. We have a red pivot. So this is a high, even though it's red. Sellers did take over come close of the after hours. So we do got a red pivot up here. So you see $200 is the area to beat. Obviously, that was the ultimate high. We got some selling that took over up in this $200 area. So you could do a $40 stop. You could do a $40 stop. I don't know the exact math on 40. You guys will have to do that yourself. You take your risk amount by your trading range. You like I say $40, whatever that trading range is. If you're risking $100, divide that by 40. If you're risking $500, divide that by 40. If you're risking 1,000, divide that by 40. That'll let you know how many shares you need. 200 down to 160. That's on a 1-hour chart. So, like I say, your risk is getting tighter. Your risk is getting tighter. Like I say, 4-hour, we can squeeze in $50 risk. Like I say, buyer stepped up over 150, carried it over 150. 150 might be some good support. It's possible. It's possible. 150 could be some good support. So 160 would be your next area. So stop limit order at 200, right? And then you would have a stop at 160 because you want to control your risk. Please, you guys, do not risk your whole account. If you do, that's on you. Send me some money if you just want to throw it away. But be careful. Like I said, this is the 1-hour chart. So drilling down to the 30-minute chart, you're gonna get pretty much kind of the same R&R. So as you can see, this $60, like this $40 risk is pretty consistent. You guys be careful on that. That's just today. Like I say, pre-market hasn't opened up. So you don't know what's gonna happen as the pre-market start rolling in. I'm pretty sure this thing is ready to pop. I just guarantee it's ready to pop. It's almost 4 a.m. So I'm pretty sure Webull and whoever else is open at 4 a.m. is gonna start getting this thing up there. So if you're in Webull, you see this thing get into this $200 area, be ready. Me personally, I wouldn't touch it pre-market. That's just me personally, because I can't control risk in the pre-market as well as I can in the open market. I can't use a stop order. In the pre-market, super exposed. So in the if you had to trade this thing in the pre-market, I would use the 4-hour chart. That's just me personally. I would use the 4-hour chart for a bias, and I would trade based on that. That way you can actually visualize and have room to know when it's about time to get out and cut your losses. That's just me. You guys do what you want to do. Like I say, 1 hour, you get a little room. Like I say, in 1 hour, it had a $32 trading range. Like I say, this is not bad. Like I say, the 1 hour chart, you still can visualize some good entries and exits. Like I say, you got a high here, broke over 160, tried to test 200, got rejected, came back to this 160 area. You can kind of gauge when is a good time to get in, when is a good time to get out. Now with the 30-minute chart, make it bigger so you guys can see. You guys are using the 30-minute chart. I mean, you got a clear buy set up here and a nice uptrend. So the patterns are there if you guys are looking for some patterns. If you're looking for some patterns, just buy the high of a green bar, put your stop at the low of a green bar. Plain and simple. That's the basic uptrend. That's the basic uptrend pattern. That's it. You buy the high of a green bar. You could have bought the red bar high breakout, which that's normally what I would buy, right above this. So I would have had my order at 160, and I would have had a stop. My stop really would have been in this 140 to 150 area. You know, this is in the open market. This is in open market trading. I don't trade pre-market. I may nibble. I may get some small share size pre-market, just in case if I see something like this pre-market, I may get a couple hundred shares. You know, and then but I won't really take a sizable position into the open market so I can really control risk, because I have to watch it. I have to watch it pre-market, because I can't just walk away from the computer pre-market, because this thing could tank. You know, so pre-market, I'm getting something small enough to where I'm not gonna have to worry about it. I'm not gonna have to worry about losing $5,000 in the pre-market. You know what I'm saying? So, like I said, I take small share size in the pre-market. But this, you $1 to $10 in this area, you know, that's all you guys really. If you're new to trading, $1 to $10, that's it. I mean, 1 to 10 shares, that's all you guys need. Really, realistically. That's realistically what you guys need, because you got $100. If you get 10 shares of this, you got $100 right here in this $10 range. If you got $100 risk, you got 10 shares, you're already up $100 on this green bar right here. You up $200 here. You up $300 here, and then you drop back down to roughly what, $100. So you got in. Let me see. You got in at 160. 10 shares. That's 1, 2, 3. Back down to 2. Back down to 1. If you got in at 160, was up 2. Came back down to 1. You guys be careful out there. I want you guys to really be careful. I want to wrap it up. I want to just drill down, because I know it's some probably gonna be more aggressive traders out there. I'm gonna drill down to the 15-minute. Oh, the 15-minute get real interesting. But we still have a nice R&R still, very visible, very understandable. The 30-minute looks better, because, to me, this is just my opinion. whenever I get these crossbreed bars, this red, this green to red, the green to red, I drill up because the picture is clearer here. The picture is clearer here. There's no red, green, red, green. We have a solid green bar, green bar, green bar, green bar. See, as an uptrend, that's what you want to see. You want to see consistency. That helps you follow the trend. Consistency. When you drill down to the 15-minute, you know you're being aggressive because there is indecision on the 15-minute. You know, we got this little bar here, we got this little bar here, we got this little bar here, we got a little fake out here, but it is a pattern nonetheless. This is the only one I would have bought. This red bar is the only bar I would have bought because you had 4 consecutive green bars, 2 red bars. I would have been trailing the high. I probably would have got 1-to-1, 2-to-1 out of it, and I would have got out. That's just how I trade. I'm not looking for home runs. I can go to the moon in $20 every time. If my moon is $20 at a time, trust me, I will be just fine. I would be just fine. So $20, I would have been out of this thing up here at 190. I would have got my 2-to-1. What this is 174 by roughly 169. So we just say this is a what $5? $4 or $5 stop. Thing rent $20. No, it didn't go 20. It went a little over 10, like 12, 13. So I would have got my 2-to-1, a little bit more. That's just how I trade. You actually are trading this thing. If you're not just dumping your money into it and just letting it do what it do, you know, if you actually trade this thing, there are opportunities. You know, you guys know I'm better at under $10. I can size it up better. Once you start getting into these teams, then you know the game changes. The game stops. But the game changes in these areas, because you know. It's not 10 cent, 20 cent, 25 cent, 50 cent, $1. It's not that anymore. You're looking at $10, $30, $13, $15. You know, it's real odd to me in this area. Like I got so comfortable under 10, that's just where I stay, and there's plenty of opportunities down there. But like I said, if you guys want to chase this, empower to you. I haven't gotten comfortable with these ranges to be able to respond quickly to risk management and stuff like this. But this is a nice breakout here. It's short-lived, but like I said, this one green bar is all we need as a trader. And we're good. You can risk $1,000, make 2. Risk $5,000, make 10. And this little bar here, this is all we need as a trader. You know, so you know, if you guys want to go to the moon, I mean, what's your target? You know, how much money are you trying to make? Because you can buy enough shares to make it in 15 minutes. This is a nice ascending triangle breakout right here at 160. Higher high, higher low, almost same high, higher low, almost same high, higher low, breakout. Breakout. You could have had a 10 cent, you could have got in, like I said, as it was increasing. It didn't touch 160, but as soon as it hit 160, you could have got in. You could have had a 10 cent stop. You would have got what, $30 out of it. I mean, I said 10 cents. See what I'm talking about? I'm already in that mode. A $10 risk. So if it would have came back under 150, you would have just gone ahead and got out. This is a ascending triangle right here on the 15-minute. You got that. Like I say, that's $10. You would have had 1-to-1. It would have phased around 1-to-1. Could have had 2-to-1. Could have had 3-to-1. Before it pulled back. So how much do you need? This is a trader's idea. I mean, you know, it worked. And then as the market continued to, you know, I mean, this is where it ultimately closed at. But as a trading idea, this is, like I said, if you're looking at the 15-minute chart, you got some indecision here. You got a sell set up after all these green days. So you expect this thing to sell off. No, not selling off at all. Because you also got 2 pivots here. And that's exactly where it bounced at. You got resistance here, and guess what? We got a breakout. We got a sell set up. It sold off right back to prior resistance, which became support. We had a little tug of war here, a little sideways action, and we got in another higher high. We got a higher low, so we got some trotting. Obviously, it was a wall here. I don't have to look at the level 2. It was obviously a wall here. Where we at? 25 minutes. I'm finna try to wrap this thing on up. So that way I can upload it. Yes, it's almost 4 o'clock. So you guys about to start seeing some action. So yeah, ascending triangle. Then, like I said, we got this breakout. So like I said, you could have bought 160. You also could have bought this 175 area and got some profits out of it. This is trading. It's trading. So, you know, you guys keep that in mind. If you guys are super aggressive, you know, you want to go to the 5-minute chart. You're going to really need a lot of shares. Like I say, to look, it's already started. Bounced off 150. It's real. It's 4 o'clock on the dot. Bounced off 150. So, you know, as you guys are watching this, you can see in real time, $200 by 150. That would be the idea. Like I say, bouncing right off this 5-minute candle. I wouldn't touch this thing using no less than a 15-minute chart. That's just me personally. Like I say, you get better risk. The understanding is a little bit better in this area. 150 is obviously the area to hold if it holds. As far as 1 hour support goes, we got room to flush down to this $80 area. It's just, you know, it's possible. It could be a quick flush. You don't have to stay there, but it's possible that a lot of people are gonna lose money as it pulls back, if it pulls back. You guys be careful out there. I definitely want to get this uploaded by 7. I'm on, as you see, TD Ameritrade. I can see live market events. I just can't trade it till 7, which I'm cool with that. Because, you know, we only got 65K right now, 4 a.m. So, you know, not really worried about it. When 7 o'clock hit, that's when the real volume is going to kick up. That's just how it is. That's when everything opens up at 7. I don't expect this. I expect this to kind of test on 150 a little bit. It may or may not, but that's the expectation. Anybody that can get on will probably take some profits and then continue to buy back those shares at a higher level. But 200 by 150, that's my advice. I'm not a financial, you know, advisor or whatever. But hey, if you're gonna take this thing 200 by 150, give yourself room. Like I say, if you're only risking $100, like I say, you take your risk, divided by the shares. Like I say, 20 to 150 is 150. I mean, I'm sorry. 20 to 150 is 50. So if $100 divided by 50, that'll give you how many shares you need, which will roughly be 2. You're risking $100. So, you know, you guys be careful. I'm gonna go ahead and wrap this up. You guys on the 1-minute chart, you guys are just the bravest people in the world. Looks like it's already falling. You guys are brave if you're on the 1-minute chart. I stopped trading on the 1-minute chart like a month after I got into trading. Because you just don't know what's going on. You know, bigger picture wise, as you see, it's kind of fading back. Got a little profit taking going on right now. We're gonna see how much it holds. But you know, I definitely wouldn't touch it. I wouldn't touch it under 200. Just me personally. I wouldn't touch it under at these levels, not until after it pulls back. Once it pulls back, then you can start looking into entries. You know, you start getting highs like this. So 170, that's a high. So buying here, putting a stop here, that's a $30 risk there on the 1 hour. You got to wait till it closed though. The bar has to close. Wherever the bar closes, like here, the bar was closed. You could have got in here, stop down here, out here, put a stop here, you know, things like that. You guys be careful. I think the 150 is going to hold just because of momentum. We may have a shakeout, but we'll see. But I'm gonna go ahead and wrap this up. Good luck to you guys. Risk management is your #1 priority. Account management. Don't throw your whole life savings away in one day. Okay? You guys have a good one.